is Avijit Chatterjee recording a weekly session for the week of February 9th, recording this on Sunday afternoon, the February 15th. Today we will talk about the software sector. Seems to be very washed out. It's almost seen a 33% correction since the September peak. Recently, there has been tremendous fear from AI, in particular, disruptions from AI impacting industries across the board. Started off with the software industry, and from there, moved on to other logistics companies, bunch of other industries last week, kind of leading to sharp drops. And in particular, the software sector ETF IGV kind of bottomed out with the double bottom test. So we'll share that. And then we will talk about some key software stocks, Microsoft, Palantir, which is a big story AI stock, and then AppLovin. And then talk about the S&P 500. We have pointed in the past in our blog that potentially there is a head and shoulder forming on its daily chart. If that does break down, where could it lead to? We'll talk about that. But then very interesting defensive plays for those that are looking to be, like Jim Cramer says, there's always a bull market out there. So if we do get this, long-awaited correction in the market, say a 15 to 20% correction, one sector that could benefit from, call it a defensive posture from money looking for dividend-seeking investments is the REITs, XLRE. So we'll look at that chart as well. Now, just up front, just to let you know, we run this service called Chartsarefun. It's not investment advice. We're not registered investment advisor. This is primarily to share insightful chart patterns and then for you all to decide how you want to apply it for your investments. But we feel that the patterns are huge fun. There are a lot of great insights, and then hopefully it helps you kind of make your investment decisions based on the patterns that we are sharing. So here, the Chartsarefun Substack site, chartsarefun.substack.com. These blogs come out in the morning. If you subscribe to them, it'll send to your email as soon as they come out. That's a daily service. And then our YouTube site is Chartsarefun. At Chartsarefun is the channel. We appreciate you subscribing to the channel. It's free, of course. And we do weekly videos like the one we're doing today. Now, right into the software sector, we talked about the Anthropic's agentic software called Cowork, and then right a few weeks later, we had OpenAI introduce their agentic platform called Frontier. So right now, market is extremely jittery, and in particular, software stocks, all the SaaS, the software as a service stocks across the board got hit hard. So if you look at IGV, which is the iShares software sector ETF, look at from where it dropped. It peaked in September at close to 117.99. From there, it tested a bottom at 79.27. That's 33% correction in a span of from September to early February. So you're talking about close to 5 months. We saw this very sharp. It's almost like a deep kind of a correction. It's not just like a shallow pullback. It call it a fairly, in a very rapid fashion. I call it almost a very fast bear market that happened in the software sector. Now, if you look at the breakdown from 118 to 98, that target is measured towards 117.99 to 98.7. That right there, if you measure it down, it measures to something in the order of $79 and say 41 cents or so. Well, turned out we broke below it from 79.41. We did 79.27. Quickly rebounded to $87 and then pulled back, came close to retest that second low. But as it did that, look at the positive divergence. This is how bottoms form, at least near-term bottoms. So this positive divergence, higher RSI as a second low formed, a W-shaped double bottom. If you then pan out the W from 79.27 to 87.08, you're talking about roughly, if you kind of add 79.27, that's 87.27, but we are 87.08. So we are roughly looking at $7 and say 81, 81 cents or so. So if you basically take that and add it to the 87.09, we're talking about a $94.89. That's the target of this W-shaped move. And that's kind of right at the, remember there was a gap down after Microsoft earnings in late January. That, like the bottom of the gap down, This is from where it gapped lower. That gap from like the bottom of the gap and the top of the gap is up there, closer towards 98. But at least that bottom of the gap will now be strong resistance. It's exactly where this is measuring towards the 94, 95. So we think, and if you look at the MACD, that's also setting up for a bullish cross. So you can see the histogram gearing to go above the center line, the signal line going above the red line. So the bullish cross in the MACD, RSI showing positive divergence, and a W-shaped double bottom measures to a snapback kind of a rally in the, or call it a reversal in the software sector ETF IGV in the next few days is what we're looking at. Microsoft, which is the largest holding, almost 9.5% of IGV, is got a cup and handle kind of a reversal. So right from the 392 low to the 423, you're talking about roughly $31. Add that 31 to the 423, talking about a 454. So that's kind of where Microsoft could reverse to. If you look at the 50 period moving average is 460, but that's declining. We can see that it's now kind of turned around and declining. So this could come down by the time this reversal happens, and maybe it would be a 50-day test. And then there's a good chance we could fail. And I'll explain why, because S&P overall looks like a topping pattern could come down. So which means while we get this counter trend reversal, that could just be a snapback, dead cat bounce, and then a sell-off after that. And we'll talk to you where we think the software sector could head if it does break down below some key support levels. Palantir, a huge AI story stock, has beautiful positive divergence. Again, for a near-term bounce, I'm not saying I'm bullish on Palantir. Michael Burry has talked about a massive head and shoulder breakdown. If you look at the head and shoulder, right at the 142 level, you can see there's a neckline. You can see that the head is 190. The left shoulder is at 190. The head is at 207, 147, then back to 198, and that breakdown. So 207 to a 47, you're talking about close to $60. Subtract 60 from 147, that's 87. That's the downside on Palantir, and maybe eventually it could, because look at the 50 period moving average. That started topping out, started trending lower. The 200 is kind of plateauing out and could also trend lower. This bearish cross could happen of the 50 going beyond the 200. So this snapback, if you look at again a W-shaped double bottom in Palantir for the near term, you're looking at a 128 going up to 145, pulling back to a 126, slightly lower low in price, but a higher low in RSI. Look at MACD, histogram getting ready for a bullish cross, the signal line getting ready for a bullish cross above the red. So a MACD reversal, a positive divergence in RSI could make this a W-shaped reversal, a W-shaped double bottom, and that could measure somewhere towards that test of that 200-day at 160 and the 50-day at 169. Somewhere in that level, we can see 161 in the past was where was support, which will now kind of be a resistance. Somewhere in that 160 to 165 is from where it broke down, could be where we could get a snapback in Palantir. And even if you look at a measured 126 to 145 is $19. 19 to 145 is getting you somewhere in the 164. So that's pretty much where we think Palantir. And then AppLovin had huge earnings last week, yet got sold off. This was on Wednesday, kind of, gap lower on Thursday, huge sell-off, and then you can see reasonable volume in that sell-off, and then it formed a beautiful double bottom test at 360. So if you look at the low on Friday, it was at 359, exactly near the 360 that it had tested earlier in February. Again, a beautiful W-shaped double bottom is forming. That positive divergence on RSI, MACD getting ready for a bullish cross, similar kind of pattern. Whether we're looking at the Palantir double bottom or the AppLovin double bottom, this could, however, have a lot more upside if it does play out in a full W, because the 360 to a 482, you're talking about 122. 122 added to 482, you're talking about close to $602. Now that could be even above that declining 50 period moving average near 597. Now we know that it had a very sharp drop from that double top at 745, 738. It broke down with negative divergence in RSI when it did break down, and it right now is testing 360 twice with a positive divergence. So that W shape on AppLovin could give us reasonable upside. It had good, strong earnings. So momentum is there from fundamental perspective. It's just that the market didn't like, again, market is right now very jittery about SaaS stocks. This whole Anthropic disruption and then the agentic from OpenAI. So that could be a knee-jerk sell-off with then maybe a snapback coming is what we look into. So we seem to be expecting reversals in IGV going up towards the 94, Microsoft reversal going towards 450 plus, the Palantir towards 60, 163, 164, and AppLovin way higher towards 600 if we do get it. Now, a little longer term view on IGV, this is these, again, iShares. Look at the trend line joining the lows from 2022 bottom. That trend line broke down. It was in that 87 region. It broke down. This is a weekly chart. So not this week, but the previous week, it broke down. It tested a key support. If you join the lows 76.10 to 76.68 to a slightly higher low 79.27, that trend line, it tested successfully, rebounded. Where did it rebound to? It rebounded to where it broke down from. So that's the rebound. However, it managed to close with a doji reversal, open and close at similar levels at 82.77. If you notice, it opened at 82.60, closed at 82.77. So that's kind of a long tail, a whisker on the top and the bottom, and that kind of a reversal doji could get us that W-shaped up, upside towards that 94, 95 as we talk. But if this breakdown comes, so if we finally break down below 76 to a 118, you're talking about a $42 breakdown, right? 76 to a 118, you're talking about close to 42. 42 subtracted from 76, that's almost closer towards 34. Now, this we know is 47 will be, this is the 2022 low, will be strong support. It's not going to just break through 47, but eventually that measured target could get us closer towards that $35, $34 level is possible on IGV. So we do see more downside. And look at the 50 period. The one here is started to curve lower. The 50 period, in this case, the weekly moving average. And then we can see that the 200 is still climbing, but the 50 has begun to kind of, to curve lower and start pulling lower, which means a negative trend is now in place for the software sector. Now, moving on to a broader S&P 500, we know that the Max 7s help here because the huge weights in the S&P 500. But look at the daily chart with the head and shoulder pattern. A neckline is forming around that 67.80, 67.90 level. Left shoulder at 69.86, went to 7,002, then a 69.93, a right shoulder. That breakdown, it reversed with a doji reversal. So maybe if the software sector is reversing, maybe they could save it and not break down yet. But if this breakdown comes, so you're talking about a 6780 to a 7,002 level, that you're talking about 222 points. 222 subtracted from 6780 gives us 6558. And that's close to where the 6504 200 period moving average is. So a pullback, we know that the November low was 6521. So that level of 6550 to 6500 to 6550 could turn out to be strong support where we come down. So this could be a potential pattern right here. We can say 6550 test here as well. So that level is tested. So that becomes a neckline of a larger head and shoulder. So 6550 to 6920 back to 6520. Go to the head 7,002, break down to 6550 around that level, have another right shoulder move towards 6,900 and then break down. And if we get a 7,000 to 6,500, you're talking about 500 points subtracted from 6,500 to 6,000, right? So that's potentially a possibility that we could sometime this later spring in the May, like starting from a sharp pullback from March into the May timeframe, we might see a quick pullback towards that 6,000 level in the S&P is what we're thinking. And then on the bullish side, as Jim Cramer always says, as a bull market someplace, something very interesting is panning out in the REITs. This is the commercial and the home kind of sector REITs. XLRE, that's a sector, that's a defensive sector, pays dividends. It's a very steady business because these are long-term dividend earning REITs that are out there. Look at the cup and handle on that monthly chart. This is a very long-term chart all the way from 2008. Been climbing steadily. This is not a high beta mover, moves very little at a time. But if that breakout happens from a 29.53 to a 43.50, you're not talking about what, a $14 move. A $14 to 43.50 is 57.50, 57.47 to be precise. So that's the upside. So from 43 to 57, you're talking about $14. That's roughly what, about you know, 30, 35% or so move is potentially possible in the REITs in XLRE. So look, the RSI has begun to climb. MACD is about to turn higher above the, you know, 0 center line. So the MACD histogram turning higher, RSI continuing its climb towards the 70, and that cup and handle breakout means if the market has got a pullback, a sector that could benefit from defensive posturing, from money rotating into to earn the dividends and its safety, could be this XLRE for folks to think about. So summing it up, software sector has had a sharp pullback from 118 down to 79. That's a 33% pullback in a span of 5 months. That's almost a very sharp bear market kind of correction. From there, it seems to have testing kind of with positive divergence, technical signs of a W-shaped reversal. Could go from here. It closed near 82 towards 94 is possible. Microsoft could have a cup and handle move over 423, a reversal pattern again towards 454. Palantir, beautiful double bottom, 128, 126. When the second bottom was tested, positive divergence in RSI, higher lows. MACD getting ready for a bullish cross. So Palantir, a move from 145, breaking it towards the 163, 164 seems a possibility. Test that declining 50 period moving average. Apple oven, beautiful strong earnings, got sold off, but saw a decent reversal at 6.4% on Friday. Some buying stepping in. This W-shaped double bottom measures a lot higher, above 600. So we'll see if any bullish news comes on the spectrum. Buying could come back into this stock and could have a dead cat bounce, but go closer towards 600 kind of move can be ruled out. Longer term view of IGV does paint a bearish picture. This is almost a broadening top. If you join the tops and if you join the horizontal base, that broadening top break down below that 79 from 118, you're talking about roughly $39, 39 from 79, you're talking about, you know, almost $40 or so. So that's a possibility, 40 or anywhere between 35, depends on where you measure the base. If you measure from 76 to 118, you're talking about what, $42. 42 from 76 is 34. So depending on exactly, because these things are kind of not pinpointed, but in that region, say in the, you know, best case, we take 79 to 118, that's $39. So 39 from 79 is $40. So that's potentially where we think the software could pull down to. S&P seems to have a head and shoulder topping pattern. That breakdown below 67.80 could take it down very quickly towards the 65.58 target. That 65.50, as we've seen, have been tested before. If that does happen, this is potentially a longer term head and shoulder. So this left shoulder from 65 to 69, back to 65, a head at 7,000, break down to 65, and then a right shoulder rally from there, and then the breakdown could measure towards 6,000 is where this could. Negative divergence here as the head and shoulder is forming. So this is bearishly not looking good at all. Negative divergence in RSI, negative divergence in MACD, printing lower highs. Only thing bulls can do is they can make a breakout above 7,000. It still can be ruled out. If they do that, then they violate the head and shoulder. It could turn out to a bullish kind of a pattern. But looking at the defensive sector, real estate, the REITs, that kind of posture is telling us a defensive play is coming in the market. It had a nice, good move of 5% for the week. That breakout of a 43.5 is a long-term breakout from 29 to 43, $14 added to 43 is 57.5. That's where we think the REITs are headed, which means a defensive posturing, which means technology sector, the aggressive sectors could start being ready for a correction in the weeks and months ahead. With that, good luck investing, folks. We'll talk to you next week. Thank you for listening.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.